All right, everyone, if I could have your attention up here, we're going to get started. If you could take your seats. Hello, everyone. My name is Bruce Sellery. I'm the president of the Canadian Club of Toronto. First, thank you to McCarthy Tétrault, our sponsors for today's event. Thank you very much for our support. So McCarthy, was that a McCarthy hello? I also want to point out the Toronto Life Insiders. We've got some people here from Toronto Life Insiders. If you're an insider, where are you? Or it's too secret, you're not allowed to tell anyone because you're that inside. Canadian Club is a partnership with Toronto Life magazine, and periodically we have Toronto Life Insiders spread out around the room. I love it. Cannabis became legal in Canada 18 months ago, and since then there has been a lot going on as the industry takes hold. What's going right, what is going wrong, and what can we expect for the rest of the year and indeed for the next couple of years or so? We will find out from our panelists. Let me introduce them. Rami Chalabi is a partner at McCarthy Tétrault and practices in the firm's business law group in Toronto. He is a member of the firm's National Cannabis Group and advises a range of clients across the cannabis industry and helps them identify and pursue strategic growth opportunities. Dr. Christelle Gedeon is the Chief Legal Officer of Aphria Inc., a Canadian-based global leader in cannabis. Prior to joining Aphria, she was a partner at Fasken Martineau Dumoulin. Her practice area focused on the life sciences industry, including products such as drugs, food, cosmetics, and cannabis. Rishi Malkani is a partner at Deloitte. He leads the cannabis practice here in Canada. Boy, that's hard to say, cannabis in Canada. Rishi has significant experience in the cannabis sector and works with a variety of clients, including licensed producers, retailers, governments, and consumer packaged goods companies. Andrew Pucher is Chief Corporate Development Officer at Tilray. He joined the company a year ago from Goldman Sachs, where he was managing director. In that role, he served as head of Canadian Diversified Investment Banking, which included the coverage of the Canadian cannabis industry. And moderating today's conversation is Sunny Puri. He is principal and portfolio manager at Anson Funds, a long-short hedge fund with offices in Toronto and Dallas. Prior to joining Anson, Sunny worked at RBC Capital Markets. Sunny and our panelists, I am pleased to turn the Canadian Club of Toronto podium over to you.
Thank you, Bruce. Thank you again, Bruce. I think the purpose today is to give everyone an update on the change in the landscape. And when we thought about putting the panel together today, I think I'll just take your words. It was the best of times and it was the worst of times. And we really want to figure out where we go from here today. So one of the observations that I'm sure a lot of the people in this room have had is that there's been significant management turnover in the industry. And I think I'd turn it over to the panel to get views as to where we go from here and what these leadership changes mean for the space.
I'm happy to start. I think in terms of leadership changes, there's been a lot across the LP space over the last couple of quarters. I think it's healthy for the industry. And I think you need to put it in context in terms of where the industry started and how we've gotten to where we've gotten. So the industry's been around for about a year and a half in federal adult use legalization. And if you think about 2.0 products, it's really the full suite of products available for 2.5 months. And over the course of that year and a half and 2.5 months, we've seen retail sales north of $1 billion. And if you look at analysts' reset expectations over the last couple of quarters for the industry, people think this industry is going to go from $1 billion of retail sales to $4.5 to $5 billion over the next 2 years. And so I think anytime you have that fast of a growth opportunity, it requires a certain mindset of initial founders and entrepreneurs. And I think those tend not to be the individuals that grow and run 1,000 to 3,000 person publicly traded companies. They probably won't enjoy doing it either. And so I think as you look across not just cannabis, but high growth industries, it's quite typical to see this turnover in leadership as you go from what got you here isn't going to get you there in terms of companies. I think as well, it's interesting, we're seeing a lot of, as companies are turning over leadership teams, there's this desire to have CPG leadership. And the idea being, this is going to be a CPG market. And so if you have somebody that worked at Procter & Gamble or Unilever or Starbucks, they're going to be great in the cannabis industry. And I would actually approach that statement with a little bit of caution. I think as you think about the Canadian cannabis industry, it is very unique. It's a highly regulated industry, and it's one where there aren't great analogs to, frankly, CPG. And so I think, having CPG experience is helpful, but also having cannabis experience, having regulatory experience for new leaders coming into the industry is necessary and going to be helpful.
Thank you. That's very interesting. Could you perhaps maybe elaborate in the sense that, how have the leadership teams changed, and what other industries have people come in from, and anyone on the panel really, and how has that really helped the industry grow up over this short period of time?
I guess I have to take that one because I'm the only one in the other company. Leadership teams have changed, following on what Andrew said. Cannabis experience is important. Experience from other industries is important, but actually personality is actually extremely important, because while we are being thrusted into becoming these 3,000 employee companies, we are still very much startups. And you need to be quite entrepreneurial. You have to be willing in a day to do really everything from nuts and bolts, even at the most senior positions. We don't have a lot of infrastructure. We don't have a lot of systems. We're building all those things in. And so when you're importing people into this industry for their experience, what you're really looking for is someone who's willing to be entrepreneurial, who's willing to get their hands dirty a little bit. It's not really all tactical and strategic right now. There is a lot of that now. We've evolved to some extent where we're looking at strategy and we're looking at tactics and we're looking at growth. But on the day-to-day, you're still spending time on the ground doing very fundamental things to the business.
Perfect, thank you. And then I think it'd be helpful for the audience to hear from the advisors in the space in terms of how the space has grown up, and perhaps maybe touch on some of the governance issues that have been had and where we go from here.
Yeah, I mean, I think to understand, kind of the evolution, it's important to look back as well from 2016 to 2018 and see how things evolved. And I think during that period, and especially leading up to adult use legalization, you had huge demand in the capital markets for cannabis stocks. You had a lot of companies that that came to the fore that were really early stage companies that some that were just putting shovels in the ground, building their facilities, and as well as you had the investor that was looking at these companies. A lot of it was heavily retail based, some family offices, but you don't have the typical institutional investors you'd see on certain go publics. Then there wasn't a huge focus on governance, and that money didn't come with a lot of strings attached, I think, in those early days. And as an executive of a company in those early days, and we dealt with a lot of clients, like you're dealing with a lot of competing priorities where you have this impending deadline of October 17th, 2018, where the Canadian cannabis market's going to open up massively. There's potential for product shortages was a big topic of conversation at that time. You had a lot of people looking to really expand and grow their facilities, which was a huge undertaking from an infrastructure perspective. You had also sort of trying to build a story that Canada was sort of this market leader and build sort of the global story and not just be a Canadian story. Lots of M&A activity during that time as well. And I think on the list of priorities that companies had in those early stages, corporate governance probably wasn't the first. And so that was, I think, that's where some of those issues might have come from. And I think now you're seeing companies take that more seriously, not just because I think from a perspective of being more process oriented and making sure you're deliberating properly and reaching the right decision and have a system in place to do that. It's also a way to sort of protect yourself from securities class action litigation and being attacked for making decisions maybe too hastily or things like that, and being more deliberate in your process. So you're seeing that maturation, and you're also seeing, I think, a lot of those issues and maybe deals that were struck earlier on kind of coming to the forefront and subject to more scrutiny now.
Can I just add to that, though?
Of course.
I mean, there is the sort of the market pressures, but the fundamental thing that underlines the business is the cultivation of cannabis. And no one has ever grown cannabis at this scale and at this magnitude in history. And you had management teams who were faced with massive facilities, and everyone thinks weed's really easy to grow, and it's actually quite difficult to grow. And so it's not as though the management teams really had the luxury of excessive product. They had the struggle of getting the plant to mature, getting it out the door. It was all the processes that were needed to get it into the stores that were creating additional pressure over and above all of the M&A activity that was effectively a frenzy, I'd say, in 2016, 2017.
Perfect.
Yeah, I mean, I'd echo Rami's thoughts. I would agree with Christelle's thoughts, and I would agree with Andrew's thoughts. I would add maybe that I think what you're seeing is a lot of reaction to capital markets as well. I mean, you saw executive management teams turn over starting late last year or even mid last year, and I think the capital markets have started valuing companies on different metrics. It's not so much enterprise value to cultivation capacity. They're looking at more traditional financial measures like enterprise value to revenue and sales, and I think that calls for a different thinking in the management suite. And I think I'm pleased to see boards of directors reacting to this and listening and understanding that they need to change the composition of management to be one of more of a mature industry, I guess.
Thank you, Rishi. I think we've all heard it, that there's been a lot of hurdles in the space, and it would be really helpful, Andrew, if you'd like to walk us through, with Canada being a leader in the space thus far in terms of moving the regulatory path forward, how have you had to face some of those hurdles, and where does that put you in a position on the global scale at this point?
Yeah, I think, it's interesting. There's a lot of talk now in the investor community, folks looking at the Canadian LPs as a group and then looking south of the border at U.S. multi-state operators or U.S. single-state operators, cannabis companies. And the discussion tends to be around, well, the U.S. is a larger market. That's where all the profit's going to be made. That's a more attractive place to invest versus Canada. But there's some structural differences that I think, even though the U.S. will remain a larger market than Canada is today and will be in the future, what the U.S. companies don't have, because of the patchwork of regulatory state-by-state battles that they need to fight, as well as their lack of access to the banking system and the capital market system, is the ability to really take advantage of what's happening globally with cannabis. And so I think the LPs have been positioned historically better and will continue to be positioned historically, looking forward in a better position versus the U.S. companies as they look to exploit opportunities outside of North America, right? If you believe that, as I firmly do, this is a global paradigm shift around the use of cannabis, first and foremost as a medicine, and use of it as a medicine becomes a Trojan horse for opening up markets on a recreational or adult use basis around the world. You'd want to bet on the Canadian companies who have the access to proper capital, have the ability to invest overseas, and really set up the infrastructure, do what we've gone through over the last 4 to 5 years in Canada over in Europe, and have a 4 to 5 year head start in Europe, and the same in Latin America. So it's not without its short-term volatility in Canada, but I do believe as a group, the LPs are still better positioned, or the best positioned in the world, to take advantage of what we see as a global opportunity.
Perfect. Christelle, maybe you could elaborate in terms of, there's obviously been an early lead in Canada in terms of having the financing, and how you think product innovation in Canada has the ability to sort of springboard abroad, as Andrew suggested.
Yeah, so innovation's an interesting one for the Canadian LPs because our regulations don't really allow for a lot of innovation, at least not until Cannabis 2.0. And I think that's why everyone's been waiting for the subset of next generation products. What that has forced us to do is look at innovation in perhaps less traditional places. Things like know-how, agricultural methods, genetic engineering of plants, making them more robust, making them more suitable for growth in particular environments. And only now are we really starting to explore innovation in formulations and methods of delivery. I think what we're seeing is every company is going to really take its position in terms of the identity they want to have. So if you really have a strong rec focus, you're really going to be focused on a suite of products for the recreational user versus someone who is very medically focused. They're going to be investing more and looking more to innovate in the medical space, looking for efficacy, looking for safety, and looking to start moving their products more into the traditional pharma space.
Perfect. Andrew, maybe you could help in terms of Tilray's background with their, I guess, relationship with both Novartis and AB InBev and sort of how that's helped push things forward in terms of innovation and in products.
Yeah, in terms of those partnerships that you referenced, we've got a partnership with Sandoz, which is the generics division of Novartis, for sales and distribution of medical cannabis in certain countries around the world. And with AB InBev, we have a 50-50 joint venture for beverage products. So we've got beverage products in Canada today, and we're looking to expand that in other geographies, namely in the US and Europe. And I think in the industry, we're at a very early stage still of development of this industry. And so it would be naive for us to think that just because we started in cannabis, we're going to be able to do everything the best. And if there are opportunities to leverage established distribution channels, if there's opportunities to leverage somebody else's balance sheet and somebody else's research and development, there's a real opportunity for synergies there. And so that's really at the crux of the partnerships that we look at, which is where can we bring, as a cannabis operator, cannabis experience and R&D to bear, and ultimately be more capital efficient in this environment. So leverage distribution, R&D, things that other companies can do better than us to drive new product categories.
Perfect. Rami, I think this space is obviously emerging, and you've advised on a number of transactions and situations, and the crowd would love to hear from you in terms of, where companies are thinking and how they're thinking about moving forward, whether that's, mergers or other things along the way, so that they can, enhance their consumer experiences or innovation, et cetera.
Yeah, and I think Andrew's exactly right. I mean, for Canadian companies right now, the real thing that I find an interesting question is the tension between how things are going to be developing in the U.S. versus globally. And if the global markets open up at a faster pace, then obviously Canadians are going to have a real head start there, and they have, and they will continue to. What we're seeing now is, I think there is, like we were talking about, a big M&A frenzy over the last couple of years. A lot of it was driven, some by the capital markets, the wish and desire to announce something, show you're active in the space, get your name out there, and boost your stock price and things like that. I think now we're seeing companies be a lot more strategic, and on a global scale, it's really where, not just where can you sign an agreement and get somewhere, but where do you actually see the markets opening up, and where do you actually want to be going forward and building and developing those relationships. And I think an important thing for Canadian companies is you're not going to be able to do it on your own without a strong local partner, people who understand the regulatory framework, where things are going, where your opportunities are going to be. So we're seeing a lot of that and fostering those relationships more so now than I think we were when people were just more concerned with, saying they were in a jurisdiction and signing some kind of deal with someone, as opposed to finding the right person that can actually help them grow and execute on a strategic plan.
Flag planting.
Exactly.
That's what was happening.
Right.
There was a lot of flag planting in the early days. We just need to be there. But I think the one thing I'd sort of temper with what both Andrew and Rami were saying is, in places like Europe, you can't just ship and export everything we're doing in Canada. They have their own regulations. They have their own, they have a concept of novel food, and they have rules and requirements even for the production of cannabis that we don't have to comply with in Canada. And so it raises the bar from an operations perspective for us to be able to get product into those jurisdictions. I kind of disagree with what you're saying with respect to the US. I think those companies, if the market opens, could potentially really decimate the Canadian LP advantage because they have scale already in multiple, I mean, those MSOs have scale in multiple states. It's very, very simple for them to sort of join forces, and we're sort of left at the gate waiting to see whether our brands even have a foothold in the US. So I think in each country, it's a slightly different strategy. While we do have the know-how for making the products, there's an education element with governments, particularly outside of North America, and there's a pivot that has to be done for our product and our know-how to be exported.
Yeah, I think that's a really interesting point, and when we're talking about, you know, how can Canada maintain its lead, I think it's important to focus on what Canadians are good at. We're really global leaders in AI, in technology, excuse me, in IP. So I think leveraging the fact that we do have all these SOPs and we'll have them 3 years before anyone else, that we do have a lot of IP and know-how is really important. And I'm pretty confident that we'll see Canada play a leading role in the technology space here. So coming up with global systems to track and trace cannabis, coming up with novel ways to basically monetize IP. I think there's a lot of ways that the Canadians are going to lead. And then just one last comment on the U.S. piece. It's hard to predict what will happen in the U.S., but you know, unless it becomes federally legal, which, you know, ostensibly they could still have a very good industry without it being federally legal, but it needs to be federally legal for the U.S. to export even a gram, right? So a lot of the talk we hear now is about the U.S. coming up, you know, being able to operate out of the handcuffs they're currently in now, but it still wouldn't be federally legal. So I think there's still a lot of uncertainty as to how quickly they'll be able to jump and dominate the European market.
Thank you, Andrew. I think you've spent a lot of time in the U.S., and there's been a lot of turmoil with the FDA and CBD, as well as with some of the MSOs, which came out with a lot of promise, but have also had their own issues. Would love to maybe get the basic definition of an MSO from you and your view for the crowd and their benefit, as well as what the state of affairs is down there.
Yeah, so the definition of an MSO is an operator in the U.S. that operates because it's federally illegal to operate in the U.S. in multiple states. You effectively need to replicate your asset base and your people, and frankly, even your source to, you know, your access to the state-by-state banking system with credit unions and such on a state-by-state basis. So it's a very capital inefficient way of operating a business where you need to recreate essentially what you're doing in every single market. Maybe you bring your SOPs and your philosophy and your brands across the border, but that's really about it. In terms of what we're seeing in the U.S. market right now, is I still think it's an incredibly attractive market. It's still a place where personally I look to invest in the cannabis space. But I think we've seen this re-rating over the last 2 quarters in Canada, and we've really seen the same dynamic play out in the U.S. And so the industry in North America no longer trades on a multiple of press releases, right? The running joke was enterprise value to press releases, and you just throw something out there and retail investors would go wild and you'd see a bump in your stock price. And what I think, despite all the pain for investors, this is all positive what's happening right now. We're driving towards fundamentals, and companies are trading on fundamentals, and especially in a capital constrained environment, because investors have been burned, they're saying, show me the money, show me the profit, show me how you're going to be able to survive without investors continuously cutting checks. And so I think what's happening in the US is very similar to what's happening in Canada. What's going to be really interesting, though, with the US multi-state operators is we've seen 5 companies file for bankruptcy and insolvency, some of those CCAA in Canada. We're starting to see it in the US in terms of companies hitting the wall in terms of access to capital. And it's not clear that they're going to have the ability to avail themselves of Chapter 11 because they're running federally illegal businesses. So we'll see what ultimately happens, but I think across North America, you're seeing a re-rating, companies trading on fundamentals. You're seeing a shakeout that's going to continue over the course of 2020. And what I take as a real positive is the fundamentals around the long-term size of the prize in North America hasn't changed. I think the timelines have been pushed out a little bit, but this is still going to be a multi-billion-dollar industry in Canada a couple of years from now. It already is in the US. And these are companies that, this is not going to be CPG companies that are running these cannabis businesses, at least under the current regulatory frameworks. These are going to be new cannabis businesses that are going to ultimately be the winners in Canada, be the winners in the US, and be winners globally. So I still think it's a really interesting space to be as an operator, as an entrepreneur, and as an investor.
Perfect, thank you. I think we should pull back to the domestic situation. And Christelle, it'd be great to hear about Ontario retail. Perhaps we're all wondering when we can get product just across the street at the corner.
Is that a personal criticism?
No.
Okay. The Ontario retail system. I don't quite know where to start, to be honest, Sunny. I think Ontario has moved in the right direction. And so, my understanding of the model is we largely adopted the LCBO model. And as you see changes on the board of the OCS, you're seeing a real desire to try to open the market. I think statistically, we know that still 85% of product is still purchased on the black market. And the only way to combat the black market is really to open up access to product at the retail level. While there is now a mandate to grant more licenses and have up to 1,000 stores in Ontario, it's extremely slow moving. To some extent, there is, to our understanding, some apprehension even at the board level as to what that means. And there's still a lot of fear around the product, even in a place where it's federally legal and everyone knows that everyone can consume in the open in Canada. And that education is causing a bit of slowing in the actual opening of these stores and the opening of the market. To some extent, in the first year, it was a balance of licensed producers not producing enough. Some of that was part of the struggle of the cultivation and the scale up. But this year, I would say there's a tremendous amount of product that is available for sale. There's simply no outlets. The interplay of pricing and tax and access and formats and whether people actually like to shop in these stores and online is a whole other dynamic that hasn't been addressed yet. So I think right now we're crawling. We're not even walking yet on the retail side in Ontario.
For sure. And then I think Rishi or Andrew, if you could maybe comment on obviously the biggest competitor for Canadian LPs, which is the black market. How do you compete with them, whether from a product promotion perspective or a format perspective?
Yeah, I think of it as very simply, would you ever go shopping? Think about the grocery store that you go to and where you go to buy milk, right? Would you ever go there when you can't find the store, it's not in your neighborhood, and when you do get to the store, it doesn't have the products that you want, it doesn't have the brands that you want, and everything's too expensive, right? And so it's I agree with Christelle, the biggest issue right now is just access points. You can't even find the store, but once you get into the store, we need to see a loosening of regulations so you can actually build brands, so you don't walk into a store and everything's effectively white labeled to you as a first time or even as an experienced consumer. Excise tax and pricing right now, there's too big of a gap between what you buy on a per gram basis in the legal market versus the black market. And we've started to solve the issue around product selection. I think last year that was a real issue when you could go into many of the illegal dispensaries that looked like legal dispensaries in Canada, and you could buy vape products, you could buy edibles, and that's now starting to be solved. So I think, I think of these four major issues, and locations and store rollout being number one on the list, but you need to think about promotion, you need to think about brand building, and you need to think about pricing. I think those are all being worked on. We're in a much better place than we were 6 and certainly 12 months ago, but it's going to take some time. But I also look at Alberta. I mean, Alberta saw they had an issue with the rollout or the speed of the rollout of their dispensaries. They've now got one dispensary per 10,000 people in the province. That's, if you look at the US analogs, that seems to be the right number. That means we should get somewhere between 1,300 and 1,500 stores in Ontario, and Alberta fixed it in less than a year. So I think we're going to get there. It's just going to take a couple more quarters.
Yeah, I agree with the factors, the four factors you mentioned that are necessary to defeat the legacy market. I would change the ordering a bit. I think quality needs to be there first and foremost. There's research done that folks are willing to pay, a marginal or even a moderate premium to buy in the legal market. But I think even to Christelle's point, there's lots of product available, but I don't think it's the product that consumers are particularly interested in at this stage, and we're seeing that with a lot of returns and inventory write-downs. So I think as the LPs get comfortable and start producing some more of the products and improving the quality, I think you're going to see better competition with the black market. And obviously price, obviously availability, all very important things. And I think the second most important thing is the form factors. You're seeing now finally you're seeing PAX era pods, etc. in Canadian stores. Those are very difficult for the black market to compete with, on things like that. So assuming we can get good take-up and traction on products like that, I think that'll go a long way to defeat the legacy market.
Yeah, and just to add to that, I think another key component, and I think all those factors are important, is actually getting to understand the black market consumer and what they're actually buying and where there's where's the actual points where LPs can compete best. Because I think, on a lot of dried flower products in the early days, just getting these facilities up and running and getting cannabis out the door created some quality challenges. And I think learning more about how you can actually produce product on that scale that can compete with the black market's important. There's obviously, if you're not subject to regulation, you can have an edible with as much THC as you want, which some people are going to go to, and that's not ever going to be a place where you can compete with someone who wants that and someone who's willing to produce it illegally. But if the numbers for the black market before legalization were somewhere around 5 billion, that's a huge customer base of very loyal customers that are willing to buy something that's against the law. So if there's a way to bring those people over, then that's a really strong kind of bedrock for the industry. So I think learning more about who's actually buying and finding a way to get that information is, I think, a key component.
Well, we don't have access to that data. So we'd love to make products for the people to stop buying from the black market, but we have very spotty data. And so it's kind of like stumbling in the dark. And we'll try this, maybe you'll like that. Or for instance, we often send out our marketing teams to the dispensaries and these illegal markets to see what's out there. But I love that you guys are comparing the quality on the black market to the stuff that we have to produce, which is almost farmer grade. And by far, I'd have to say there has to be some public service announcements and education to really scare people in understanding what they're consuming when they're buying from the black market. When you buy from a licensed producer, you're buying effectively a farmer-grade product. Your echinacea and your lavender is not made to the same grade that this cannabis has to undergo. It's not the same process. It's definitely not the same level of quality. The inspectors that go through the facilities, it is effectively, recreational product is effectively medicinal product that's being sold to a recreational user.
Thank you. Rami, one from the crowd. Given all the restrictions around promotion, how are LPs building and differentiating brands or lobbying in order to push for changes?
Very creatively, and I'm sure Christelle and Andrew will have views on this, but I think we've seen just a lot of efforts to find, I think focusing on education is an important one, and a place where you can find some traction to build some sort of brand equity. I think it's one of the things that's been, the most effective is focusing on quality, right? And actually having a product that's out there that resonates with people, and you'll see, lots of reviews on social media in terms of certain producers that have gotten good traction. But I'm sure you guys are going to have views on how you're dealing with those challenges as well.
Yeah, I think quality is key. I totally agree. And then there are legal, clever ways that you can have influence within the four walls of a dispensary. And so part of our strategy at Tilray, this is all public, is we've got a number of partnerships with retailers across Canada where we've made investments in them up to certain levels or certain caps that are permitted by provincial regulators. And in exchange for that, we have preferential rights in terms of product placement, them doing promotions on our behalf, them allowing us to have our sales force interact and really train and educate bud tenders. Because we're finding still most of the market, decisions are made around SKUs and brands and products by ultimately that bud tender. When somebody's walking into the store and saying, here's the effect I'm after, here's the occasion that I'm going to or attending, what do you recommend? And so to actually be top of mind with that individual and have him or her recommend your product or your brand, we're finding at these early stages is really important. And taking a step back, if you look at the US, which I think is a great analog for this, there's a reason why in states where there have been federally legal sales for up to 7 years, it is still advantageous for companies to have influencer-owned retail, because brands take a long time to build, they take a lot of capital to build, and especially in an environment where Health Canada makes that really difficult to do, to advertise and build brands, you need to find clever legal ways of having influence on that sale and purchase decision.
Thank you. One more from the crowd, and I guess topical given Pharma Cielo received some sort of activism yesterday. But the question is, what are the shareholder activism and litigation risk issues facing publicly traded cannabis companies? And Rami, maybe we'll start with you on that one.
Yeah, I mean, there's still quite a bit of risk out there, and I think it's really looking back at that period of that, like we talk about that frenzy between 2016 and 2018, where there was a lot of transactions that might have been not gone through a really deliberate process that you typically see, that are really being subject to a lot of activism. And you're also seeing a lot of potentially transactions or facilities or projects that might not be as they seem if you're reading the public disclosure and actually going to visit the site. So I think if you're an opportunistic hedge fund or whatever the case may be that's looking to, there's still a lot of deals that are out there that maybe have not come to the surface in terms of what's in terms of some problems with them or things of that nature. So I think there's.
I understand I have to answer. I'm being pressured. I have a fond place for that short seller because he was my short seller. So he launched his attack on us last December. So him and I are good friends. I have to say, the short seller activity, quite opportunistic. I mean, they're doing it with a purpose. And I don't completely disagree with what Rami's saying, but I do want to caution the entire audience in saying, we just came out of an exact same report as Pharma Cielo, and there's a lot of misinformation. There's a lot of outdated information that's out there, and they craft their own version of the story in order to give rise to a result that they're seeking to get, which is the reduction in the share price. That said, a short seller attack, while I'm not really trying to say it's a great thing, it does force you to go back to fundamentals, and it does force you to turn around and look at your infrastructure and look at your processes and look at your board and strengthen and bolster what matters to the company. And so I'd say that it was quite a big distraction for the company when it happened to us. I'm extremely sympathetic to Pharma Cielo because, again, he went to the site and took photos of things that were probably there, but he happened not to see them. But at the end of it, you come out with, we've come out with much stronger and robust governance. We are one of the only, if not the only, profitable cannabis company we are extremely focused on fundamentals. We have our growth, we invite everyone and anyone to come to our facility. And the short seller really forced us to have that openness because the retail shareholder is a little unfair in that, everyone understands weed, everyone understands the product. And everyone expects to have an idea of how you should be running your business. Institutional shareholders have a bit more sophistication and a little more distance from your business. They just want to know that you're really operating the right way. And what happens with these short sellers in this space in particular is they touch on that sensitive point of that individual retail shareholder that truly believes you have either taken their money or you have done something in a way that they feel is unfair to them personally. And that is part of the battle we have in cannabis. And until we can get to a place where we have a much more, I guess, steady shareholder base, short sellers are going to, we will continually be vulnerable to short sellers and the allegations of short sellers. And it's very, very hard to educate a retail shareholder on the technicalities under securities law, on the evolution and the changes in your business, and to get them to a place where they can actually come to trust you again. That's really what's damaging about, short sellers like Hindenburg.
Quite the hot topic.
Yeah.
Andrew, maybe to end on a positive note, would love to hear if there's any sort of positive activism with shareholders that happens behind closed doors where, shareholders are making positive suggestions or making introductions and more of the typical things that we've seen from the Carl Icahns and other of the world over, the last couple of decades.
There is some of that going on behind the scenes. And I would say for every angry email you get from a retail investor, a would-be short seller or a short seller, there's oftentimes other ones behind the scenes that are coming from long-term holders who are in this not for a quick bump over the course of the next quarter or month or week, but see the strategy that you're implementing and executing on and are patient. We've got that, thankfully, in spades with a lot of our shareholders. We've got a bit more of an institutional, it's still a retail shareholder base, but a bit more of an institutional shareholder base relative to other cannabis companies. And so there actually is, and especially on a day where our stock's down, we put out our earnings yesterday after market close. We've actually gotten some pretty good and strong support from folks that realize this is going to be a volatile market environment for the next couple of quarters for the LP group in Canada and globally. But for those that have a strategy that are being good stewards of capital, there's going to be winners in this market over the course of the next couple of years and decades to come. And so it's really positioning yourself to be one of those winners. And so we do get a fair bit of support behind the scenes, sometimes from the folks at Anson as well, too.
Thank you. Any parting thoughts?
Yeah, I just echo Andrew. I mean, I think it's going to still be a positive year despite the capital markets pullback. I think there's going to be a lot of distressed M&A. There's going to be a lot of rationalization. But I think a lot of the Canadian cannabis LPs, with management changes and a focus on fundamentals, are well positioned. I think it's going to be exciting to watch them.
Perfect. Thank you, everyone, for taking the time to listen. Thank you.
Definitely will be exciting to watch. Thank you very much to our panelists for new perspectives on the retail investor, Christelle. He was my short seller. That was so, warm. And I'm sure he feels the same thing. I'm sure he feels exactly the same thing. Also, some great new context on the export opportunities where Canadian companies can dominate and where we need to temper our expectations about what global domination looks like. So thank you very much to Rami, Christelle, Rishi, Andrew, and Sunny. Thank you so much for your context for that conversation. 3 very simple thank yous to conclude our event. First, to McCarthy Tétrault for sponsoring our event, for the contribution from MediaEvents.ca, Canada's event space, and VVC for live streaming today's event. Thank you all for making time in your busy work days to come and participate in our 3rd annual Cannabis Outlook. Thank you for coming.